right, good morning, everybody. It's Thursday, August 4th, 2022. Let's go ahead and get started with our S&P analysis here. Yesterday really nothing really happened yesterday that was to write home about. We didn't take any trades in the room. I had a nice disclaimer up on the screen to be careful within all of previous daily price range. And so we only trade the first, well, I'm only here to trade the first hour. And for the first hour, it literally, as you can see here, just kind of chopped around back and forth. There were some little holds of levels and stuff, but nothing really, like I said, to write home about. And then the market pushed higher, like we said out of the open. We said there was a nice big confluence of bullish signals from the low. So we were expecting a potential push. And the market did go ahead and get a nice push to new highs here. Um, Came up and had a little trouble at our minor level and then peaked on through up about 4 points above it and failed. So again, like I said, nothing really to scratch our backs about. And coming into this morning, we're still playing up top here at new highs. And in the overnight session, they did go ahead and peak even further up to 41.73 half or 41.73 quarter here. So let's go ahead and jump up. We'll take a look at this from the higher time frame perspectives and start talking about the levels we want to be aware of this morning. So coming up here, remember we said over on the weekly, we're still, until we can get up through the high of June, which happened to be 42.0475 up there. You can see I kind of shaded in this area over here. Until we can get up through that high, that weekly is going to have a very, very clear bearish divergence off of the highs. So we're still watching it. Obviously, as it pushes, it could be each candle. So that's the tricky part about the higher time frames and the tricky part of this type of divergence setup, because it started to form somewhere down back at, I believe, the end of July. And the problem was we had all this space. So from all the way up at the high, all the way down to the low, we knew we could push a few hundred points here and still see that signal. So that is the kind of the caveat with this setup. But until we break through 0475, we will have that weekly bearish signal. We talked about the same thing down here on the daily. Again, there's that little shaded area up off the high of, I believe it was actually the last day of May going into June. So until we can get through there, we will also have a similar type of argument on the daily. So let's go down the 4 hour. This is what gave us our clues that we would get a potential attempt to break out to the upside yesterday. And that was all these 4 hour. And then remember, we came down to the hourly here. All the hourly bullish signals, all the 4 hour bullish signals gave us a clue that there could be a push. And that's exactly what happened here. And as we came up to the high of yesterday, up here on the 4 hour chart, we did get a bearish divergence. And then, like I said, in the overnight session, we did peak up and push a little bit further. And when we did that, this 4 hour candle also is showing a bearish signal from the high. So what we're in right now is we're stuck in a little tight box over here. Bearish divergence from yesterday's high. But then again, just like we had the 4 hour signal going into yesterday morning, we do have a 4 hour signal, bullish signal from the overnight lows. So again, it's a tight little zone right here. This 4 hour candle is going to close 30 minutes after the open. So there's still plenty of time here, about 45 minutes for this candle to develop. And within 45 minutes, who knows what could happen. This candle could end up turning green or blue if you look at my orientation and start pushing higher within 45 minutes. That's a possibility. So we're going to have to watch this, be aware of it. If the candle continues to stay red and we continue to pull back, there's a higher chance that the candle is going to close and it's going to have this really clear bearish divergence. And if that's the case, we will, I believe, get a nice clue that this is one of those peak above and fail bearish divergence patterns, which should lead to some type of push down to test the lows down below us here. So we've got that, and then we have the hourly basically agreeing. We had hourly bearish signal from yesterday's high. In the overnight session, we got the hourly bullish signal. They popped it up, got a little bit higher than yesterday's high, and then another 60-minute bearish signal from there, just like we see on the 4 hour. So it's a tight little box until we can actually break the low of the overnight session or the high of the overnight session. It's hard to say which signal is going to win out here. So just be aware that if the market cannot push through the highs of the overnight session, we would be expecting that pullback to come down and break the overnight low and then come down into the levels we're going to talk about here. On the other side of things, if the bulls end up holding and they're able to get through the high of yesterday, everything up above, again, we've been talking about for so long now. So if they break through the high of the overnight session, I'd be targeting up into 84.5, 92, 42.03, 42.13, and then we have that 50% retracement from the all-time high to the low of the year sitting right here at 42.21 quarter. So be aware of these levels up above us. The 61.8 retracement of the sell-off from the all-time high is all the way up here at 43, about 43.58. So that's what we have up above us. Now let's look at what's going on down below the overnight low here, which happens to basically be the high from back on August 1st. Remember, we came up into 41.42. We peaked through it by a point and a half, and pulled back. And then the next day, they inched up just a little bit further and pushed up to that 47 quarter level. That low, or that high, I believe, is the low of the overnight session here, or at least it bounced 2 ticks in front of it. So if we get down through there this morning, we are going to be pulling back into a whole bunch of chop, which you guys know is not my favorite area to be trading. But we have our levels here. Each level is interesting. So we do have the fib leg, basically this weekly fib leg from the low of the week, which I believe was 80.5, all the way up to the high we made this week at 73 quarter. So that fib leg will give us the 38 retracement here at 41.3775. The 50% happens to be within a point of 50% of the previous day. And then the 61.8 is right here at 41.16. 41.16 was also just about the fib leg we were looking at a couple days ago. So we've got the fib legs on there. We've got our major and minor eye levels. Remember, 40.81 was that low we were watching, and it bounced to the tick back on July 29th and then came down, broke it by 2 ticks, and then bounced back up back on August 2nd. So when we get back down, if we get back down to 40.81, that's going to be that major dividing line. It kind of reminds me of back when we were over here. If you could just bear with me for a second to find, yeah, back over here. See if I can zoom it over. Remember when we were bouncing around 71.5 on the previous contract, and we kept coming into it, hitting it almost to the tick, bouncing right around it, and we were basically waiting for this thing to break. And once it broke, we were going to be looking for that sell-off back lower. So if we zoom all the way back to where we are right now, give me a moment here, it looks very similar to me. We're kind of chopping back and forth. We keep holding 81. So once that breaks, I think it's probably going to be a nice clean shot, at least back to 40.58, back down to 40.42 to 40.44, which happens to also be one of the larger major fib legs down over there, and then down into some of these deeper levels that we've been talking about. Now, what I did do that is new on the chart here for this leg is we had to redraw the fib leg from, I believe it was 39.13 quarter all the way up to this new high at 73 quarter, and that gives us 40.74 as a fib level. It gives us the 50% happens to be 40.42 to 40.44, and then the 61.8 is down right here, right around actually the lows of this. If you look back over here, we had a chop block for quite a while. Oh, wrong button. We had a chop block going on over here for quite a while, and that 12th half is sitting right at the base where we kept bouncing off of that back on July 28th. So I do think that there is significance to the fib legs outside of the fact that they're just the larger retracements. So be aware of those. And then everything else on the chart is the same levels that have been on the chart for weeks now, or at least the last week or two. So that should set you guys up this morning. Just to kind of summarize everything, we have some really good bearish signals from yesterday's, or from the overnight high. The question's going to be, is that going to win out and make this pullback down through the overnight low? Or is the 4-hour and the hourly bullish signal from the overnight low going to hold, and they're going to just kind of go sideways and then pop on through to come up to new highs? Nobody knows. Nobody knows what's going to happen here. So all we can do is lay out our levels and have a plan. So if they come down and this multiple time frame bearish signal from the overnight high wins out, we get through that low, I'm going to be looking to get short down into that retracement level. Of course, 42 is always a possible level we could just peek into and then rip on higher there. You never know if that could happen. But I'd be targeting down into at least that retracement level at 38, and then from there down into 50% of yesterday and 23. If it continues to go, then we've got deeper targets below us. And remember, the main thing here is if we can get through 81, I think that's going to open us up for a much deeper pullback, at least down into 40.42 to 40.44 and beyond if it continues to go. On the flip side, if we can get up through there, I'd target more so up into 42.03 and 42.21. However, you cannot ignore these major structure zones here, our minor eye levels at 84 and up at 84 and 92. You never know if they're going to find trouble and then fail off of one of those. All right, guys, so I think that kind of wraps things up for this morning. So for those watching out on YouTube, have a great day, and we'll be back tomorrow.